Hello, everybody, and welcome to USPAC LiveTALK. I'm Christine Niesel, CEO and co-founder of Bravium Consulting based out of Rockville, Maryland. We are a technology consulting and software product company that specializes in helping organizations automate their business processes through the use of workflows in low-code, no-code platforms like ServiceNow and Pega. We are a proud member of the U.S. Pan-Asian American Chamber of Commerce Education Foundation, which we all fondly call USPAC. I'm so glad to be here today at USPAC LiveTALK, where we will be covering the very important topic of how small businesses can access funding for growth as the economy reopens from COVID-19. I want to introduce our guest speaker from Wells Fargo, Damon Dishman. Damon is a 20-year veteran of the company. He is a senior vice president and the small business leader for the Pacific region, which spans from Silicon Valley, San Francisco, and the Bay Area up through Oregon. Damon is responsible for the small business strategy within this region, which supports employees and the overall customer experience for small businesses in hundreds of branches. He began his career with Wells Fargo in 2001 as a personal banker in Oregon. And before assuming his current position, he served in various roles such as service manager, branch manager, district manager, and most recently as area president in Raleigh, North Carolina, where he led a team of about 400 people. Damon, welcome.
Well, Christine, thank you for the great introduction. And it is my honor and pleasure to be here with USPAC today. And what an exciting agenda we've got ahead as we move into our presentation.
Great. Yeah, so Damon, now that things are starting to open back up, a lot of small businesses are looking to grow, and oftentimes they need funding to support this growth. Can you please share with us your insights on how small businesses, what they need to do when they seek funding?
Yeah, it's a great question, and it really centers today's presentation that I'm going to provide to everybody. Really does center around several different aspects to consider as we move or as businesses look to gain capital. Today, we're going to review several different items, Christine and team. We'll go through some topics around capital considerations, which is exploring various resources to access capital. We'll dive deep into what I'm calling small business lending, which I think of as more of the traditional lending you get through traditional banking institutions. We'll spend some time today talking about the Small Business Administration or SBA lending. And then finally, we'll close out today's presentation with the Wells Fargo Small Business Resource Center to arm folks with more resources, particularly to help recovery through the pandemic. So as we move to our next slide, let's dive into capital considerations. Really, two concepts I want to dive into. First of all, knowing your resources, and then next, shifting your perspective in some ways when you're considering access to various forms of capital. First, with knowing your resources, I want to encourage everybody to be aware of different funds, loans, grants that can help support all really weather difficult times. For example, today the SBA has a new program for the restaurant industry that was recently announced, and that could be accessed, of course, for those in that industry, but may not be something we're accustomed to thinking through in terms of access to resources. It's also important, I want to encourage everybody to really be proactive in searching for local resources via public programs, your network, through research. Again, we've got federal programs nationally, there's local or county programs, and then there's oftentimes state programs that can create access to capital, especially as everybody's working so hard to help the small business economy recover through the pandemic. As I encourage y'all to shift your thinking, think about the potential ways that you can generate revenue, shifting and pivoting away from how do I sell more, and really think about what your clients need and then offering that. An example of this might be easier payment methods for your customers. We offer at Wells Fargo payment acceptance solutions that include a various set of applications that can really help you connect with your customers and ask for feedback and keep them informed. And oftentimes our business owners don't necessarily think of those payment acceptance methods as really a form of digital or technology that they can really enhance some of their processes and practices, again, staying in touch with their customers.
Damon, if I can interrupt you with a quick question. Where can small business owners go to find out what aid programs and resources may still be available?
Christine, it's a great question. First and foremost, I recommend going to the SBA.gov website. As I mentioned earlier, they just launched, I think it was 2 weeks ago, the Restaurant Revitalization Fund. That's a great, and another Shuttered Venues grant program. They also have various programs like the Economic Injury Disaster Loans. Most recently, I think the most commonly known one is the SBA PPP program, which of course has expired. But also encourage folks to check out their local CDFIs, Community Development Financial Institutions. They have been really working hard to source resources to be able to provide the community as well. There's a great resource on venturize.org that folks could search at, and they actually have a little search engine in there where you put in your zip code and it'll help you localize your local, or identify your local CDFIs as well.
Great, thank you.
Great question. Well, let's jump into small business lending. And I want to dive into some of the concepts, starting with the 5 C's of credit. And so really what this slide and these next few moments will really do is help you think about, what do traditional lenders like Wells Fargo look at as they consider a loan application for traditional lending. And so, you think about your credit history, the bank is going to look at that credit history, and they're really looking to see how have you handled your past credit obligations, because that's really an indicator that the lender may use as a prediction of how much credit they might want to extend. Next is the collateral. So if you think about this, it's personal and business assets that may offer a backup source of repayment. So, I think the most common one would be, if you're a business owner and you own your building, right? That building is that source of collateral for that particular commercial real estate loan. The next thing is capital. So this really is that personal investment in the business and the assets that can be turned into cash quickly, in case there's a downturn, and being able to have that ability to repay. So the banks do like to see that you've got some investment into that particular purchase. And then again, you've got some of that cash flow and reserves or ways to quickly liquidate in order to be able to handle those more adverse times. Next, we look at the conditions. And the conditions really are all internal and external factors that may affect your ability to repay that loan. Internal conditions include your plans for the loans, the resources you have for carrying them out, your experience and qualifications for that particular investment to ensure that you've got a sense to succeed, of course, with that investment. And then external conditions include really everything that's beyond your control as a business owner. So these could be industry trends, economic trends, your competition, regulatory bodies or things that might be governing your business. And so, yeah, that's kind of a summary of the conditions. And then capacity, being our last C, is really how will your business generate enough cash to repay that loan and any other commitments that that particular business may have. So in other words, any other loans or lines of credit that could be extended. So those are our 5 C's of credit. And I'll just share briefly here. If you go to wellsfargo.com, we've got a site called Wells Fargo Works for Small Business, and these 5 C's of credit are on there. And there's even some additional insights and resources if you're interested in learning more about the 5 C's. As we move to our next slide, I want to talk a little bit about matching your business and credit stages to the life cycle and the unique components of the various stages of the business life cycle. And so what this slide really illustrates is when you're in that seed and startup stage, your strategy for access to capital might be a little bit different. If you think about seed, that's really taking your entrepreneur spirit and your idea and really turning that into a viable business model. And developing that business plan is a really critical component. I think of the business plan really as the way for that business owner to know with confidence that their business will be successful, because it really does outline, building your marketing plan, your financial plan, your product offering, your niche, et cetera. And it takes a lot of work to complete those. But again, I really do believe that helps that business owner really be confident on all aspects of the business to be successful. Then the business moves into that startup stage. And during that startup stage, this is when the venture really gets off the ground, and obtaining funding really is a critical priority. So, consider investors, other entrepreneurs. Typically banks are going to look for the business owner to have a lot of skin in the game, particularly in those early stages, right? Because we know, unfortunately, a lot of businesses don't make it to that 2-year and that 5-year mark. And so this is where, a lot of business owners leverage personal and family assets. They'll leverage maybe business credit cards. Oftentimes banks will pre-approve those at the account opening. And then also outside investors and micro lenders. I'll share an example of that. I worked with a business entrepreneur recently, and they were working to start up a bagel shop, and they were able to source investors through their network. And these were, little micro loans, 5,000 to 10,000, sometimes even smaller. But there was a contractual agreement with those investors to have those fully repaid with some interest after just a couple of years. And there was an upside. If that business performs well in those first couple of years, they may be able to earn more than that contractual agreement. So that's an example of outside investors. And then there's the micro lenders where you can do crowdsourcing, et cetera. As your business moves into that growth stage, this is really where things are starting to mature. Hopefully the credit profile has been built for that business. Again, the credit card, maybe a line of credit, et cetera. But at this stage, typically the business really is looking to pay down their debt, maybe refinance the commercial real estate and leverage that equity to maybe fund either some growth strategies, et cetera. And then, typically this is when the business is generating the kind of revenue where they may need a larger line of credit, et cetera, to really help enhance that cash flow, because those orders and whatnot can be pretty significant, and you need that extra capital to be able to mobilize those offerings for your customers. Then as we move into the expansion phase, this is where businesses really start to think about taking that mature business to that next level. And so oftentimes the loans or the different credit venues that businesses use at this stage really come into the unsecured business loans, maybe an SBA 7A or a 504 loan. Maybe there's an expansion that requires equipment or vehicle financing, et cetera. And you can think about this as potentially expanding the business to new markets, or could even be like franchising, right, where you are opening more brick and mortars in different locations as well. And then as you think about the transition or the last stage, this is really where business owners start to think about either selling the business or transferring it to the family, those types of things. And really the primary focus here is to really pay down that debt and have those assets paid off, if you will. And that way that business doesn't have a lot of debt, and that transition period can be perhaps a higher sale amount, or of course set that next family member up for success, not having as much debt underneath that business at that time.
Damon, I'm curious, what types of small business lending programs does Wells Fargo offer?
Oh, what a great question. Thank you, Christine. We really offer the full gamut, and I think most traditional banks probably offer these as well. But we've got a great credit card program with rewards. Those can also be combined with the consumer rewards if the customer has both of those consumer business cards. We offer lines of credit. We offer term loans. We've got a really great program around business real estate financing. We do help businesses that do international business with letters of credit. And then we've also got a really specialized program for healthcare practitioners called Practice Finance. And then we are also a preferred lender for the Small Business Administration. So we offer their full gamut of credit options as well.
Awesome, thank you.
And speaking of small business lending, let's dive in a little bit on some of the small business lending options that are available out there. As I mentioned, Wells Fargo is an approved lender under the SBA's Preferred Lender Program, and we're committed to SBA lending and the U.S. Small Business Administration's mission of helping small business owners grow and thrive. We work together with the U.S. SBA to stimulate small business lending in communities across the country. We're helping businesses of all sizes, including smaller, newer business, and as well as diverse-owned businesses across access the capital they need to operate and grow. Every day, we're meeting with entrepreneurs and small business owners who are pursuing SBA loans to expand their business, purchase real estate and equipment, and/or buy businesses that create jobs and drive economic growth. And so as I dive in a little bit on this ABCs of small business lending, it really is the SBA's mission to help businesses grow and thrive. Again, all business sizes can access SBA lending. As part of the government relief packages, there are some extra or new incentives or lowered cost for some of the SBA programs. Again, I'm sure everybody listening and tuning in today is aware of the PPP program. That was, again, an SBA program, but not this traditional type of SBA loans. And as you all think about SBA, again, you can think of them as opportunities to expand a business, purchase real estate, buy a business, and various other purposes.
And Damon, how do SBA loans differ from other types of credit or loan programs that are available to small businesses?
Yeah, it's a good question. I would say, the SBA lending really provides access to capital to borrowers that may not be able to obtain certain types of terms and conditions because the federal government and the SBA help back and offset that particular lending facility. And so in other words, you've got to meet the federal requirements for those SBA programs, but they help carry some of the risk. And ultimately what that does is enables the banking institutions to put more capital out into our communities.
Great.
Awesome. Well, let's move into my last component. And this really is a gift that can continue to support small businesses. During the early stages of the pandemic, we launched our Small Business Resource Center. And this was a direct commitment to us supporting all small businesses. You don't have to be a customer to access this information. And we're continually updating this website with various infographics. We've offered 2 live webinars, the latest one where we showcased a couple of specific business owners and how they pivoted to maintain their revenues through the pandemic. We've also got a lot of videos and also various other resources, articles to really help business owners think about the various stages of that rebuilding process and gaining, again, that strong footing and perhaps, again, some insights into how to pivot that business model to adapt to this new environment that we're all working and living in. So encourage you all to visit the Small Business Resource Center. It's on wellsfargo.com/Small Business Resource Center. And again, this website is available to all customers and non-customers. And we are updating this with more and more content on a regular basis. So come back soon after you check it out for the first time. And that concludes my presentation today. I really thank you so much for the opportunity and certainly hope that you all consider some of the information we provided today. Thank you again.
Thank you, Damon, for coming to the live talk today and really enlightening us with your expertise and information on how small businesses can access funding for growth. On behalf of US PAC, I want to thank the audience and all of the viewers for tuning in today. And I wanted to provide a quick but very important announcement. US PAC will host the 2021 Celebration Business and Procurement Conference on June 8th through the 10th virtually. So please check uspac.com for more information, and I hope you'll join us in 2 weeks. This concludes our live talk today. Hope to see you all soon, and goodbye.